Our next guest helps manage almost $6 billion in assets, mostly in convertible securities. Joining us now is Advent Capital Managing Director, David Hulme. David, great to have you here on Street Smart. And this is a fascinating topic. It's not often that we talk about convertible bonds. Typically, when we look at fixed income, it's corporate bonds, it's treasuries. But I wanted to start with a little bit of a convertible bonds explainer, Convertible Bonds 101. If you could quickly go over some of the mechanics and the reasons they do look attractive for someone who might go into stocks.
Sure. Well, convertible bonds are fixed income instruments. They're either convertible bonds or convertible preferreds, and they pay a coupon, and they have a maturity in the case of bonds. But they're also convertible into a fixed number of shares. So if the underlying stock appreciates, then the convertible will participate in that appreciation. And if the stock goes down, then you're repaid at maturity and you collect your coupon along the way.
And so you can typically convert these into a fixed number of shares, and then you get the interest, which I guess provides the downside protection. What types of returns, though, do convertible bonds typically offer relative to stocks? I mean, 2011 was not a great year for converts.
That's right. That was somewhat of an anomaly. Over the previous 3 years, convertible bonds had outperformed the S&P 500 for each of those last 3 years. And also, if you look over 10 and 20 years, the convertible bond benchmark is ahead of the S&P 500 and with lower volatility over both a 10 and 20-year period. So that it's more normal that convertibles actually outperform the S&P 500.
Why aren't they more broadly invested in? I mean, why they seem to always be sort of the venue of more institutional investors, and also I think they're typically associated with smaller or mid-cap stock names.
Yeah, that's something of a misconception, because approximately 10% of the market is small-cap issuers and 90% is large and mid-cap issuers. We do believe they're an overlooked asset class by institutions, though we are seeing a lot more interest from both institutions and consultants. The reason retail investors aren't as invested in the asset class is that it's mainly an institutional market. It trades over the counter, with the exception of convertible preferreds. So retail investors sometimes buy convertible preferreds, but for the most part they use funds to gain exposure to convertibles.
And a convertible preferred is different from a convertible bond how?
It doesn't have a maturity typically, but it is convertible into a fixed number of shares, and it does pay a coupon.
And is this market dominated in terms of issuance by particular sectors?
Yes, the sector makeup is not the same as the S&P 500, and the largest sectors are technology, financials, healthcare, and consumer discretionary.
And are you finding that issuers, I mean, is there a healthy amount of issuance at this point?
Last year there was about $73 billion of new issuance, and the global convertible market is close to $500 billion.
Let's talk a little bit about your particular fund, or the flagship fund from your firm. You have 3 different closed-end funds, right?
That's correct.
The biggest is the Advent Claymore Fund, which is a ticker, for those of you who are able to pull it up. AVK is the ticker. Now, one thing I noticed, because it seems like it's sort of a conservative way to get equity exposure, but when I look at your fund performance, it's either a huge home run relative to the S&P, or not so much. It seems to be a straight, it's either 0 or nothing. It's sort of binary. Why is that exactly?
Well, AVK is a fund that invests in both high yield and convertible securities. It's over 60% in convertible securities. But the key factor that's driven performance on the upside and the downside is the leverage. So a closed-end fund may employ leverage, and this fund is levered about 30%. So that amplifies the returns in the good years and amplifies negative returns in the bad years.
All right, now looking out at 2012, given that 2011 was not a good year, does that suggest that there's a lot of opportunities out there?
We believe so. Many of the underlying convertibles were down, or underlying stocks behind convertibles were down substantially last year, and we think that they've got substantial room to rebound.
We actually have some of your picks. We can pull them up right now. One, I think that stands out right away because we've had differing views on financials as it relates to the stock market, but you do like Citigroup's convertible issue.
Yeah, the Citigroup convertible preferred is quite attractive relative to the common stock because it trades at a discount to the parity value, which means that over up or down about 20%, the convertible should outperform the common stock.
And what sort of coupon is that paying?
That pays a 7.5% coupon on its face value, but it trades about 86 cents on the dollar, so it's a current yield of almost 9%.
Right, which in this market is multiples of what you can get sort of elsewhere. You also like GM and MGM Resorts. Why those two?
Well, MGM we like very much. It's a convertible bond, so you have a lot more downside protection. And it's a bond that yields 5% to a 3-year maturity. It's one of the first maturities due in the capital structure. So your worst case scenario is a return of 5% over the next 3 years. But if the stock appreciates, then you'll share in that upside. And if it goes to our target price of about $16, the bond will be worth about $116. So substantial upside if the stock goes up.
And GM?
GM, we like the long-term outlook for GM. Your previous guest mentioned that car sales have been picking up, and we believe that the long-term outlook is good for the auto industry. We like both Ford and GM, but the convertible preferred pays you to wait because the government owns a 32% stake in GM, and that's somewhat of an overhang for the stock. So we believe that you're paid to wait, and eventually the stock will go up, and you'll participate in that as well through the convertible preferred.
Okay, I've learned a lot. I feel a lot smarter. Thank you so much, David, for joining us on this Friday. That was David Hulme of Advent Capital Management with an inside look at convertibles.